If you have an IRA available to you right now, you're not going to want to miss this video. We're going to touch on how COVID-19 has actually made this much more powerful for you all of a sudden. Stick around. Hey guys, welcome back to the VIP channel. So if you've been following along on our video series related to how to optimize your wealth during this coronavirus pandemic, you'll see that we have now completed the backyard here at our short-term rental property. I think it looks absolutely terrific. Hopefully you guys are considering all the different ways that you could be advancing yourself during this problem. And today's video is not going to be any exception. If you're not a subscriber already, I would consider subscribing. We talk all things banking and borrowing, how to use leverage the right way, how to combine concepts like hating debt but still believing in leverage. That's right, you can actually do both of those two things at the same time. And today we're going to talk a little bit about that. We call tools that can help you grow your cash flow position debt weapons. And that's right, we do it with debt weapons. Today I want to talk about a very special type of debt weapon that often has restrictions but has suddenly become a much more powerful tool, and it's an IRA. If you have an IRA available to you right now, COVID-19 has actually made this much more powerful for you all of a sudden. That's right, guys. The stimulus package allows people now to withdraw up to $100,000 from their IRAs as long as you repay it within 3 years, and you won't have tax liabilities because of it. You can use the money to pay down your high interest bills. You can use it to attack home equity lines of credit or other mortgage balances. And as long as you've been adversely affected by coronavirus, you're eligible to take tax favored coronavirus related distributions from your IRA. In fact, like I said, it can add up to not just 100,000, but 200 if your spouse has an account as well. As long as you recontribute your coronavirus related distributions back into your IRA within 36 months from the withdrawal date, both the withdrawal and the recontribution are a total tax-free rollover. Now, typically, you guys probably know by now that if you're under 59 and a half years old, you'd be hit with a 10% penalty tax that would be applied to your early IRA withdrawals, but not in this case. In fact, you can take advantage of this at any age now, and you can receive the zero tax liability benefits that you would have received if you were 60, which means that you'll be allowed to borrow up to 100 grand from your IRA or IRAs, and you can repay the amounts anytime up to 3 years with no federal income tax consequences at all. Here's what's cool. You're not even limited to borrow from just one IRA. So if you have multiple accounts, you can pull from each as long as it doesn't add up to more than $100,000 total. And interestingly here, your recontributions don't even have to match with your withdrawals in any other way other than the total amount that was taken out. For example, let's say that you took out $15,000 from IRA number one, and let's say that you took out $25,000 from IRA number two, and $60,000 from a third IRA totaling $100,000. You've got 3 years to recontribute that $100,000. But here's the cool thing about it. You could choose to repay all $100,000 to your preferred IRA account. You don't have to make your recontributions match your withdrawals from account to account. You just have to repay the total. You can also make your recontributions either in a lump sum total, or you can make multiple recontributions. The 36-month window starts on the day after you receive your withdrawal. So if you find yourself strapped for cash during this crisis right now, you can obviously use these funds to bail yourself out. You can use it to pay your bills. You can use it to make sure that your minimum payment obligations still get paid. You just want to make sure that you keep the recontribution rules in mind and that you get that distribution back into your IRA within that 3-year period. Here's what I think is best though. There are no limitations on what you can use these funds for during the 3-year period. And what that means to you is that you could go way beyond survival mode with your IRA distribution. Yes, making sure that you're safe first and foremost is important, but beyond that, you could use it to pay down debts. You could use it even most especially for purposes of growth by way of income and asset acquisition. So if you're looking to grow cash flow, which is why we're looking for liquidity and looking for debt weapons in the first place, is to have more money left over at the end of each month, we seek liquid capital that gives us the opportunity to make sound investments. And we already all agree that there will be more income and asset investment opportunities over the coming years than we've perhaps ever seen in our lifetimes. And we just went through something known as the Great Recession 12 short years ago, which ultimately was one of the single greatest transfers of wealth in history. This is going to be a repeat, folks. This is coming. And if you have access to funds, you'll be able to take advantage of those opportunities. You can use the money to invest it in, say, a new business venture. We have a gentleman that we're talking about here on the channel in the next couple of weeks, so make sure you're a subscriber, who went from nothing to $9,100 in profit on a side business that he was working while still maintaining his full-time job. He's concerned about losing the job. He already hates the job. And by putting in 2 hours a day, 6 days a week, 12 total hours per week for the first 30 days in business, he was able to pull down 9,100 plus in total profit. Guys, that's monstrous, right? How much would you spend to get that type of a return? I mean, if you spent $2,000, $5,000, $10,000, $25,000, $50,000 even to start a business that's earning you 9,100 in profit immediately, then you're in a winner, okay? The returns on that are no-brainer, which means that if you could find the funds to get that startup moving, if you had the capital to invest into that type of a model, again, you could transition out of a job you hate and into something that you enjoy a lot more that might even end up not only paying you better, but allowing you to live life on your own terms. So I love the fact that this new debt weapon availability exists in spite of all the downsides that are causing it. The point is this: the opportunity really does open up when you take advantage of the lack of limitations that you might have on what these funds could be used for. Another point that I want to make is that if you are married and you have a spouse who owns one or more IRAs in either his name or her name, you can each take advantage of this, allowing you access to up to $200,000 per your household. Let's talk about how you qualify for this. Here's what the CARES Act says: that a coronavirus-related distribution is a distribution of up to $100,000 from an eligible retirement plan, including an IRA, that is made on or after January 1st of 2020 and before December 31st of 2020 to an individual. Now, here are the people who qualify. An individual who has been diagnosed with COVID-19 by a test that was approved by the CDC, somebody who had a spouse or a dependent, that's normally classified as a qualifying child or a relative that receives more than half of his or her support from you. If they've been diagnosed with COVID-19 by such a test, somebody that has experienced adverse financial consequences as a result of being quarantined, furloughed, laid off, or even having work hours reduced because of COVID-19. If you've been unable to work because of a lack of childcare due to COVID-19, and let's say that you experienced adverse financial consequences as a result of that, you would also be qualified. You'd be qualified if you're somebody that owns and operates a business that's closed or has had operating hours reduced because of COVID-19. You would also be qualified if you have experienced adverse financial consequences due to other COVID-19 related factors, but that will be specified in the future by the IRS guidance, and I personally just don't feel comfortable unless I would already fit into one of those pre-existing categories. Okay, we're trying to eliminate as much speculation or unpleasant surprises down the road with this. Now, what happens if you don't recontribute the amount that you took out? Well, then you're going to be taxed on the amount that you don't recontribute within the first 3-year window, but you won't have to worry about the 10% early withdrawal penalty if you're under 59 and a half years old, which is cool. So should you take advantage of this? That's the big question here. The first thing that I would always recommend is that you talk with a tax professional and make sure that you're going about this the correct way. If this money is borrowed and not repaid as with any other debt, if it is frivolously spent, you will end up in worse condition than when you started, which means that it is critical that this is used to put you in the best financial position possible. For those of you guys that are curious about making withdrawals from your tax-favored company retirement plan, you might even be able to do that assuming your company allows for it under rules that might be similar to those for IRAs. That being said, of course, employers and the IRS do have to work to figure out the details on something like that. So talk to both sides before you take any action there. Bottom line, guys, is that I see this as a tremendous resource for you to grow your wealth. This, coupled with many of the other strategies and available income and assets that we're featuring here on the channel, make this something that could be quite life-changing for you if used properly. So make sure you're a subscriber to the channel. If you haven't already claimed your one free coaching session, do that now at freecoachingcalendar.com. Also, drop a like on this video. It certainly helps the algorithm. It tells YouTube that this type of content is really important right now. And I would obviously appreciate that a lot. It gets it into more eyeballs and can help people a lot. So drop a like, please. Leave a comment. Have you already withdrawn any money out of your qualified IRA account? Tell us a little bit about that process. How much did you take out? What were the details that you discovered? Let's continue to share information and keep this conversation going, guys. We are each other's best friends during this process so that we can obviously come out of this thing not only healthy, but cash flowing even better than when we got into it in the first place. We're going to look back on this, and it will be a huge moment in time. This is the life-changing chapter that we're all looking for. So let's find the silver lining, guys, in this disaster called COVID-19. I appreciate you being here. We'll see you on the next video. Until then, make it a great day. Keep on cash flowing. Bye-bye.